Prabhu KB, CEO of Evocan. As you are aware, we are into the business of enabling wealth. We enable wealth through training, coaching, mentoring, enabling clients and students to make money regardless of market conditions through our training programs and through our technology solutions and products, Vetri, innovative investment strategies, so far and so far. Our training programs for students are meant to enhance their basic knowledge and improve upon their financial knowledge and in general to spread the financial literacy. We have released a series of 16 videos that's going to help immensely beginners, students, housemakers or anybody for that matter who wants to enhance their knowledge. So in every video we discuss what happened, why it happened, what will happen, why, when and how it will happen. Which is why I request everyone to watch this daily video on the markets and you can get a good feeling and understanding of where market is, what will happen, why it will happen, how, when it will happen. So today is March 4, 2023, Saturday. As always in Saturdays you are aware that we discuss the global market performance for the previous week. That is Dow, Nasdaq, S&P, FTSE, currencies, commodities for the week of 27th February, Monday till 3rd of March, that is yesterday, Friday. So first we will tell about the rates where it closed for the week. Dow closed 33,390.35, 1.75% up for the week. Nasdaq closed 11,689.01, 2.58% up for the week. S&P closed 4045.64, 1.9% up, while FTSE closed 7947.11, 0.87% up. So last week, if you recollect, we had discussed, because last week was 27th February, we said that there are 27th and 28th, 2 more working days for the month of February. We had given where the month will close for all these indices. First we will discuss about that. Dow for the month, we had stated, last week's video you can go and see, we had stated that it will close below the 10-month exponential moving average. Okay, 32975, that was the level we said. Where did it close? 32654.98. You can see the power of technical analysis. That's the power of technical analysis. So last week, after forming a solid red candle, this week in the weekly chart it formed a solid bullish candle, a bullish bar reversal and a bullish harami kind of a candle, and now Dow is in a good steady wicket now. But as we said, the up move is going to be very limited in this month again. But what had happened, crucial things that had happened, Dow in the daily it has formed gap up, 2 days of gap up. In fact, it came near the 200-day moving average and from there it jumped up and then it formed 2 solid green candles. Also, it is above the 50-week moving average. It is taking support at the 50-week moving average, which is a very important level to watch. Also, what had happened in the month of, in the first 2 days, the second day of trading day itself, that is on March 2nd, March 1st rather, very first day itself, the low of March is below the previous month's low. That means normally the closure, if that happens, the closure will not be, for the month of March I am saying, will not be higher than the high of the previous month. That is February, it will not close above February month's high. That is what normally will happen. What is that level? 34,333.87. That is what we expect it to close. So Dow, it is taking support at the lower levels, but yes, it faces resistance. Okay, that is what it is. It is above all key levels. February, as we said, it formed a bearish engulf candle in the monthly chart. Nasdaq, it closed at 11,689.01 for the week. Last week, in fact, February close, what did we say? We had said that it will close below 11,584.55. What was that level? It was January month's close. We had said that it will close below January close. That is what had happened. We had expected it to form a shooting star and close below the January close. That is what precisely it closed. February where it closed. See, yesterday's close was different. February close is February 28th close. That is a month close. So 11,455.54. Once again, you can see the power of technical analysis. That is what we had said. So what had happened in Nasdaq? Nasdaq, if you recollect, last week I had said that it formed a solid red candle in the weekly chart and came below the 50 and 200 week moving average. What is 200 week? 4 years average. Okay, but this week it formed a solid green candle reversing a kind of a bullish bar reversal and also bullish engulf kind of candle, and not only that, it is now above the 200 week moving average, above the 50 week moving average. So that means it is taking support, solid support at that 200 week and also 50 week moving average. Dow on the other hand is hovering between 200 day up and 50 day below. It is hovering between that level, while Nasdaq is hovering between 50 day and 200 day. It took support, and also now it is above the 50 week and 200 week, though it went briefly last week below the 200 week moving average. Likewise, in the monthly chart, it came close to the 50-month moving average. What is 50-month moving average? 5 years again, 4 years average. But then it bounced, which means Dow, Nasdaq and S&P will come, we'll discuss, is getting solid support at these levels. Hence, going short at this level is not going to benefit people, while you can't expect a big up move in the on the upward side, at least in Dow and S&P in this month, while Nasdaq has good potential to go. Anyway, we'll discuss that. In the monthly chart, it has formed a small green candle. Now it is above the 8 and 10 exponential moving average. S&P. So what is S&P? It closed at 4045.64. Okay, that is the level. We are set 4045.64. So last week, what happened? S&P, it opened a red candle. It formed once again. S&P also, it mimicked Dow and Nasdaq. It formed a solid green candle, and it closed February where it closed 3970.15. What is the level we are given? We had said that 3940 to 4012. It will close within that range we are given, where it closed 3970. Once again, you can see the power of technical analysis. So here, we want to tell only one thing time and again: market does not move on the basis of fundamentals, but moves on the basis of perception. Perception is nothing but mood of market, which is nothing but demand and supply. That is accurately captured by technical analysis. That's what we are saying. Technical analysis tells us accurately. So now S&P, once again, it is also similar to that of Nasdaq and Dow, taking support at the 50-week moving average and jumping above the. In fact, for a brief period, it came and touched the 200-day moving average. From there, it bounced nicely. So that means it is taking support there, but it should not once again come and touch that level, and 2 or 3 times if it happens, that support will be broken. So that anyway, time will tell, but at this point in time, at least the 200-day moving average is acting as a very strong support for all 3 indices, and the 50-week moving average is also acting as a fantastic support. So hence, the risk reward is not beneficial for somebody who would like to go short at these levels. That is what it is. In the FTSE in the case 7947.11. So what we had said, we had expected it to close below the Bollinger upper band. However, we were slightly proven wrong there. It touched the Bollinger band and closed. So that means we had expected the up move to be intact. There is no second opinion on that. However, we had expected it to close slightly below, but it touched the Bollinger upper band. It's nicely riding along the Bollinger upper band. That means if it is a nice bullish scenario one can witness. If somebody is long in this or would like to go long in this, it's a delight from a trader's perspective, because the upper band is going up and the price is touching nicely along the upper band and going up smoothly. If you recollect, in all my videos we had said that FTSE is the strongest of the indices and it is going up very nicely. That is what is happening. So FTSE, once again, there is nothing much to say. This month it is formed a small green candle and it is riding nicely. So we expect the up move to be intact unless otherwise we see a solid reversal. So lastly, VIX at 18.49. We expect VIX, we had said that it is on a significant downtrend and it formed a solid red candle in the monthly, and this week also it formed a red candle and it is on a downtrend. So 18.49, probably another 1 or 2 points down. It will VIX, we can say it has a low volatility regime. If that happens, then that means the volatility is very less. That means the market, it is good from a trader's perspective, but nothing much difference it makes to an investor. So that is what it is. Next is dollar index. Dollar index, it closed this week at 104.4 88. So last month, what did we say? In the monthly chart, dollar index had formed a solid green candle, bullish engulf. We had said that it is going to close more or less at the same level. So where it closed the month? 104.825. In fact, we had said that it will slightly close above the 10-month exponential moving average. It will close above that level we had said. So that is where it had closed. In this, it formed a solid bullish engulf in the monthly chart, that is in the month of February. In the weekly chart, that is yesterday it concluded after a significant uptrend, it is now facing a resistance and formed as red candle, solid red candle. But in this month, that is in the month of March, we expect it to go sideways. We don't expect much of up move or much of down move in this month of March. Okay, which is why it might be a good sign from a equities perspective. Okay, so also one more thing very important is it is now facing stiff resistance at the 50-week moving average. 50-week moving average is acting as a resistance, and in the daily chart, which we had said quite some time, 200-day moving average, and it is above 50 but below the 200-day moving average. So that is acting as a resistance. Of course, it's well below the 200-day moving average, and also in the daily it is forming a rounding top. Normally, if a rounding top or rounding bottom happens, when a rounding top happens, it means it is going to go down. If rounding bottom happens, it is going to go up. It's the opposite of it. But rounding top, it may take many candles, which means it can take another 20-30 candles, 20-25 candles, which means till the end of March, it might be forming rounding top. Thereafter, it can go down, which might be a good scene for equities perspective in the month of April. When we analyze the individual components, Euro versus USD in the weekly chart, in this week, Euro closed at 1.0632. Last week, it had formed a solid red candle and it was drifting down. However, we had said that the exponential moving average is going to act as a support. Also, in the monthly chart, the same. It is the opposite of dollar index. We had said that it has formed a bearish engulf and it will more or less form there. Till now, in the monthly chart, it has formed a small green candle, but we expect again sideways movement in Euro versus USD. Euro versus USD, it is just the opposite of it. How in dollar index, 200-day is acting as a resistance, 50 is support. Here, 200 is acting as a support and 50 as the resistance. It is just the opposite of it. So that is where it is, and we also expect sideways movement. Obviously, if this is going to be sideways, dollar index is a sum up of all the components, right? Euro versus USD is the first component. Next is GBP versus USD. GBP versus USD, it is the same story. In the monthly chart, it closed at 1.2033 in February. We had it has formed a bullish engulf. We had expected that it to close around the same levels. That is where it had happened. I would request viewers to see the video, last week video, where we had given the levels clearly, and it has closed at the same levels. Every component has closed at the same levels, and in the weekly it has formed a solid green candle in this week, but again it is facing stiff resistance at the 2.50 week moving average. Same thing. Okay, and in the daily chart, it is just mimicking the GBP versus USD, and it is opposite of dollar index. So it is taking support at 150, but it is below the 200-day moving average. Next is USD versus JPY. So this again, we said that it formed a solid green candle. We said that it will form a bullish engulf. That is what it had formed, closed there. And this week, this month, we expect it to be sideways. Because it is forming sideways, USD, GBP, USD also sideways. Euro, USD is also sideways. Same way, USD JPY is also going to be sideways, which is why dollar index will be sideways this month, because it has formed a spinning top in the monthly chart till a small candle, and in the weekly it has formed a spinning top, but again it is facing stiff resistance at the Bollinger middle band. So hence, no, we don't expect much of an up move, and also don't expect big downfall in this month at least. Next is USD INR, which is a good sign. If you recollect, we have been telling USD INR, the USD is the strongest against INR. Last week it was going up strongly, and in the monthly, as we had given, it has formed a solid green candle, forming a bearish engulf kind of a candle, slightly below that. Okay, that is what we had expected. After this, of course, if you recollect our videos, we have been saying it is forming a rounding top in the monthly chart. That means there won't be any significant up move. Okay, that is what we had said, and in fact, the downfall can happen. What had happened on Friday, formed a solid red candle and close below the Bollinger Lower Band, and also it is below the 50 and 100-day moving average. So that means it is not a good sign from an exporter's perspective, but definitely from an import perspective it is good, because rupee is strengthening against dollar. But yes, again, I don't want to go into the economics whether it is good or bad, but at least rupee is strengthening. Normally people feel happy, right? So rupee is strengthening against dollar, and as I said, it is below the it is now the only resistance it is facing is 200-day moving average, and it is below the Bollinger Lower Band in the daily chart. So if that happens, it can go and hit the Bollinger 200-day moving average, and if it breaks that, you can expect further downfall, because in the monthly it is forming a rounding top. That means there is no up move that is going to happen from here on. So hence we expect dollar index to remain weak. That is dollar to INR. Dollar will remain weak against INR in the coming days. Next is US 10-year Treasury yield. Again, last month we had said that it formed a solid green candle, bullish engulf. It will close at the same level. Thereafter, in the weekly, it has formed a doji and shooting star type candle, and in the monthly and in the weekly also it has formed a weekly doji. That means next week we can expect it to fall. But in the monthly chart, it might be remaining sideways at this level, because in daily chart it has formed a solid red candle on Friday, that is yesterday, and it is now moving towards the Bollinger middle band. But of course, middle band will act as a support. It has to break below that. But next week we expect it to go down and remain sideways with downward bias next week. Okay, but in the monthly chart, it has to decisively go below the what do you call 50-month. Okay, or in the weekly chart, 50-month is well below at 1.19. Weekly is 50 week is at 3.33. It has to break below that before we can have some significant down move in the US 10-year Treasury yield. As far as Brent and Nymex is concerned, last week it formed a doji, after which we had expected a solid morning star, which is a solid green candle. That is what it had formed in the weekly chart. And same for both Brent and Nymex. Of course, Brent closed at 85.83 in this week, and Nymex closed at 79.68. For the month of February, we had expected third month in succession it will form a doji. That is what we have said. More or less it has formed a doji, but not a doji, a spinning top. Small body was seen in both Nymex and dollar index. But if probably next month, in the month of March, that is in this month, as we had said in last week's video, it can even form another doji, or it can slightly go up. But in looking at the weekly chart and daily chart, the chances of it going up are slightly there, because in daily it is forming a solid up move, trending up significantly. But whatever happens, we expect it to face resistance. Dollar index, that is Brent at 90 levels, 90.30 levels, and Nymex at 83.40 levels. We expect resistance to happen there. Probably the movement will be there till that time. That is what it is. Thank you very much.